Are you stressed out not knowing where to find distressed, off-market, high cash flow properties in high-growth areas? What about the best strategy to build a wealth-generating portfolio? Look no further. Dragan Domovsky of Buyers Agency Australia can help. With over 20 years of experience as a property investor, Dragan is a qualified property investment advisor and expert buyer's agent, so he knows how to find the best deals and negotiate for his clients. Right now, he's offering a free 45-minute strategy session to get you started, normally worth $500. Text the code BAA along with your name and email address to 0405 105074. That's 0405 105074. And take advantage of this offer. Take control of your financial future today.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello everyone, Grace Ormsby here. Welcome back to a brand new episode of the Smart Property Investment Show, where we give you the inside track on what is going on in the property investment space. And one of my perks, I think, of having this job is that I get to talk to some pretty amazing people doing amazing things. And one of those is the Chief Executive Officer at McGrath. You may know him, John McGrath. Welcome to the show.
Hey, Grace. First time I've been called a perk in 60 years, so I'm delighted to be a perk of the job. No, it's good to talk to you, and looking forward to having a chat about the market because it's interesting times, I think, for most of us.
Absolutely. And it's always lovely to have a chat with you, but it is the first time I think we've done it in this podcast, John. So for everyone who is listening, it is a little bit of a first there, but we have had a few conversations in the past, always insightful, always plenty to talk about. And as you said, we're at a pretty interesting point in the market. Talk to me about what you are seeing, because you do really operate within this helicopter view of what's going on in the world of real estate in Australia.
Well, it's kind of interesting, Grace, because in many ways it's counterintuitive, because you would say, off the back of COVID and then off the back of a range of economic headwinds that seem to be around the world, you would think the real estate market in Australia and most parts of the world should be really, really soft, if not sliding. And yet, right now, if you were attending auctions this week or last month or 6 months ago or 2 years ago in Australia, you would say that the market's very, very strong. And data has backed that up, saying that most markets have had somewhere between modest to actually significant growth off the back of and despite all of those activities. So I think it's interesting. I mean, what does it say to me? And I'm biased, of course, as you are, I guess, to some degree about property. But I think it says that, the old-fashioned statements, safe as houses, that bricks and mortar is an asset that people understand. They feel confident participating, unlike shares and other asset classes. They generally do very well out of it. Their parents and grandparents have generally done spectacularly well if they've held it for the long term. So I think that, partly this is just a good asset to be in, and people, have to put their cash somewhere, generally speaking, and property seems to be a default back to. I think that's one of the things we find out. The other thing, of course, is that, Australia is, a very lucky and rich country, and we're currently in a generation where the largest demographic is the baby boomers. They've generally done very, very well with their property investments over their lifetime, and not only has their own property generally had the mortgage paid off and increased by 4, 5, 6 times, but they're also inheriting their parents' assets often as their parents pass. So I think there is a huge amount of wealth in the country, and it generally finds its way into, let's call it pockets. I mean, Australia is a big place, and we know that some markets, and let's just look at Sydney, Melbourne and Brisbane as 3 obvious markets that are very, very strong at the moment, and there are others. But there's a lot of people in those markets that are very wealthy, and the interest rate rises. We've seen 13 odd rises over the last year and a half, but a large section of that baby boomer demographic have paid their mortgage off. So, when you look at that and you say, well, you can now start seeing why perhaps the property market has held up well. A large amount of wealth, in particular, an asset class people feel very comfortable in. And, I think the supply issue has been very tough for our industry, the industry that, you guys talk about and write about a lot, and that I'm in. It's been tough because listing levels have been low. Now, of course, vacancy rates in rental properties is historically low. I mean, it's so close to 0%, it's not funny. Certainly not funny if you're looking for a place to rent. So I think that's added to a little bit of the strength and the demand, because there are a lot of buyers out there want to buy, and there's a relatively modest amount compared to historically to buy, and rentals at the moment, there's nothing around. So I think there's a bit of a supply and demand factor. There's definitely a bit of wealth. There is wealth despite, cost of living hiking high, and despite, world wars happening and other things that are happening out there, that none of which are great for any of us. But the property market still seems to be very resilient, strong, and I think a favoured asset.
I love that you've described it as strong, but then you've also said it's quite a tough market at the same time. And that can seem like a bit of a contradiction to people, John. Based on your spot in the market, though, what does that actually mean for the people that might be listening along?
Well, look, I think if you're in the industry, listings are tight. And when listings are tight, two things happen. One is the agent base or number of agents in the industry contracts because there's just not enough to go around. And secondly is those listings that are available, there's often a fee discounting war to try and get a hold of them. So I think from an industry perspective, you've been buoyed by the fact that prices have not only held, but they've gone up. But you've been challenged by low level of volumes and a fierce discounting war out there. So I think from an industry standpoint, I think that's the challenge. In terms of buyers and sellers and tenants, we've spoken about tenants, but first and second home buyers, well, they have been impacted by rate rises. We've seen rate money go from virtually free to, 6 and 7% and in a short space of time. And for a lot of people, that's an extra $1,500, $2,000 a month. And you just can't print that money. I mean, most people who are in that first and second home buyer, they're not flush with discretionary money available. They can take from one place and put it elsewhere. These are people that are on often dual income for a household and fixed income. And it's very hard. And not only have mortgage rates gone up, I mean, rents have gone up, but tolls have gone up, petrol's gone up, food's gone up, everything's gone up. So I think it's a challenging time for certain segments of the market. And that's why we've probably seen in the lower end of the market less strength, and indeed in some markets, definitely corrections downward in the last sort of 6 to 12 months, because investors have kind of been sitting on the sidelines a bit. First, second home buyers have had their affordability crunched at the top. They've got less. So you might have been able to borrow $600,000 a year ago before rates went up, or 18 months ago, and now that 600 might be 500. So yeah, I think it's a 2 or 3 speed economy when it comes to real estate. So some ends of the market, if you hear some of the harbourfront and the penthouse markets and the lifestyle acreage, and you hear some of the results, they're phenomenal. And yet in the bottom end of the market, it's not the same strength and depth of demand.
Are there still opportunities out there then at this point in time, especially sort of looking towards the investors or the people that are trying to get themselves on the market, get a foot in the door?
Oh, look, for sure. Look, the data says investors are starting to gear up to come back into the market. I think they've been waiting to see where interest rates would stop. Many people have formed a view that we might be at the top and maybe the next move could be down, not up. Who knows? So I think investors are seeing that this could be a good time, especially at the lower end of the market, the investment end of the market, to come in and secure some good assets. See, when we talk to investors, we say, certainly when I'm talking to them, I say, don't buy for less than 5 years. In fact, 10-year, horizon is much better. And so this is not a thing can I finesse the timing of my purchase to a month or a quarter? You've just got to say, is it a good time overall to get into property? The age-old saying, when's the best time to get into property? And the answer's 20 years ago. When's the next best time? Well, it's probably today, because you have to take a long-term view. The Australian market and sections of it are going nowhere except up. Demand, I mean, last year we had a huge boom in immigration, but that might slow down a little bit as the government retards it because of lack of housing options. But generally speaking, people around the world want to get to Australia and New Zealand. These are two of the luckiest countries on the planet, and they want to get down here and they want to get invested. They want to get their kids educated here. They want to retire here. They want to come here and start a family. There's a whole range of people, and many of them, in Asia Pacific region, wanting to get to Australia. So I think from that perspective, if you're taking a medium to long-term view on property, if you're investing in the corridors and the pockets and the cities that have got a strong growth profile, you can't go wrong. You really will do very well. But of course, with stamp duty and the other costs of buying an investment and getting ownership of it, I mean, that wipes out your first year or two's growth, with 4 or 5% in stamp duty. So that's why I say don't think about property like shares. This is not a 3-year horizon. This should be a minimum 5, preferably 10-year horizon as an investor. And if you do that, and if you buy in a reasonably good area, you will perform extraordinarily well.
Some very wise words there. We've got more to come from John McGrath just after the break, so don't go away. Welcome back to this very special episode. We are chatting with the Chief Executive Officer at McGrath Real Estate Agents, John McGrath. John, just before the break, we were talking about there is a lot of positivity within the market, and you would want to hope so, running a real estate business that's in a growth mode like your own. How are things going at the moment for you?
Well, look, this is the most exciting time ever, and I was fortunate to start this business some 35 or 6 years ago, Grace, and we've had a lot of great ups and positive years and great things in the business. But I think this is probably the most exciting time for us. We've got a platform of about 130 offices at the moment, which gives us a really strong platform to grow from. We've got extraordinary people, both at franchise level, agent level, property managers, and indeed at head office. So we're very excited about that. We've just been through a new rebrand. We're about to launch a new website. We're about to launch a new agent app for productivity within our agent force. So there's a lot of great things happening. So we're really, really excited at the moment about the next 3 to 5 years.
So much going on. And I'm curious to hear a little bit more around the growth, if you can share. I obviously don't expect you to give away any top secret information, John, but from my perspective anyway, you've probably heard it too, the whole thing where a Bunnings can kind of give people a sense of how an area is going to go. Seeing a McGrath office probably has something to do with that too. What are the kinds of things that you are looking for, or the kinds of markets that you like to operate in?
Yeah, so at the moment, Grace, we go from sort of Hobart in the south to Townsville and Rocky in the north. So we're very East Coast centric today, and that will change over time. But we really see the opportunity, and we love the fact that we've fairly recently entered Tasmania. We just think that's such a great part of this country and the world. So we're excited to be there with 3 offices currently. So really, I guess it's going to continue to be our focus to remain on that eastern seaboard corridor. We see a lot of opportunities, even within Sydney, where I'm standing today or sitting today. We see opportunity within 20 or 30 minutes drive of here. There's still a lot of areas that we love that we haven't yet representation. And people say, well, why would you be in Rockhampton and not in Penrith? Well, we just haven't found the right opportunity and the right person in Penrith, for example. And it's really important to us. We don't just put a dot on a map because it's a fast growth area. We do, but then we look for the right partnership and the right franchisee. And if we can't find that arrangement yet, we'll just wait. We'll be patient. And when we find the right person, I mean, Strathfield is so close to here, it's not funny. And we didn't have representation in Strathfield until Mike Murphy and Tarun Sethi, who are 2 of the best young agents I think I've ever seen in 35, 40 years of real estate. They became available and they decided they wanted to start their own shop, and they approached us, and that was fantastic. So that was like a no-brainer, but we were quite happy not being in the market until we found the right solution. So, I think we look at where do we also see growth? We just see it in the big cities, Brisbane, Gold Coast, Sydney, Central Coast, Newcastle, South Coast to Wollongong and so forth. And of course, Victoria, Melbourne, Hobart. There's so many great cities. There's still a lot of opportunity for McGrath representation. So we'll put a lot of focus into those. Some of our fastest growth are actually fringe regionals. I mean, Bathurst and Geelong in Victoria have been a terrific example of us, of non-metropolitan fast growth businesses where we've partnered with great people. We've just opened in Bendigo, for example. We've got dominant agency in Mudgee and so forth. So we're very excited about the prospects of our brand entering more of the regional lifestyle markets. And of course, COVID made those even better markets than ever in history to be in. Nowadays, a lot of people are selling in Sydney and they're moving to Bowral and Mudgee and South Coast. They're selling Victoria and they're going to Dalesford and they're going to Mansfield and so forth. So we think that it's a great time to be not only focused on the big cities, but also the lifestyle regionals, be them coastal or be them inland for tree changes. So it's a really good time for us. We anticipate growing quite quickly, but that will only be if the right opportunities arise. We think that we can probably double the size of the business up to about 250 offices in the next 3 to 5 years. And that may well by that stage include areas like Adelaide, Perth, South Australia, Western Australia. But right now we're very happy to focus on the infill opportunities in our existing markets.
It's almost like a property investment strategy, John.
Well,
A
it
lot
is
of
really.
thought
I mean,
clearly going into it.
Yeah, look, we definitely want to be. A couple of things are important. First and foremost, Grace, definitely it's got to be the right people. Two is we want to be able to add value. So it must be synergistic. We want to know that in the markets we're at, we can bring something as a brand and as a network and as a group in terms of traffic to our website that we think will be relevant and referrals. I mean, we've had some phenomenal referrals to our regions from our, for example, Sydney network. So, we're looking at the best people. We're looking at synergistic regions we can add value. And we're also looking at areas we think genuinely have strong growth profile because we prefer to be selling property to people that goes up at or above market performance over time, as opposed to there are some pockets. There's nothing wrong with them, but perhaps they've really plateaued and then they're not going up and they haven't got the demand. So we want the brand to be in relatively high demand, good quality lifestyle, exciting locations for people to move for sea change and tree change, and where we can find brilliant partners with great talent.
And I wasn't going to bring up the C word, the COVID word, but you did. So I feel like that's permission to just ask another little cheeky question on it, John. And that is around how, there's obviously been a lot of discourse around the effects of COVID on markets and those tree changes and the sea changes and moving out from, maybe the capital cities. Where do you expect that to go from here? Like, what are your thoughts on will the trends reverse? Is it something that's kind of now here to stay? Has it changed the psyche of Australian property owners?
100% changed the psyche, and I think it's a positive change. A lot of people who were contemplating retirement, age 65, move to up the coast, down the coast, inland. They've thought, life's short. We can now do the last 2 or 3 years in our job often remotely, traveling maybe 1 or 2 days a week or just working remotely. I mean, so many workforces, 33% of the workforce doesn't come in anymore. So I think that's opened up a whole new way of work, and employers have got behind it. They've recognised that they have to really to be competitive. And, so a lot of people now are saying, look, if you can do your job just as well from home as you do from here, you can do it. So people are saying, well, why would we be in somewhere where it's too expensive and we don't particularly love it when we could move to Terrigal or we could move to, who knows, South Coast. So I think COVID has changed the psyche of both employers and employees and just people in general. I think there's no doubt there'll be some people that try it and they reverse the decision because it doesn't work for them. That's going to be normal. And there was such a huge rush of people out of the big cities as a result of COVID. There's going to have to be some case studies of people that found when they moved, 2 hours out of Brisbane, it didn't work for them any longer. But in general, I think most people that I know that have either bought a secondary home or have moved their entire family or themselves, they're very, very happy with the move. So I do think that's changed. It's also changed. COVID also changed the metropolitan because regions and house design. When you look at it now, for a lot of people, we've had COVID, which has meant work from home becomes commonplace, even for many people, 1 or 2 days a week. If it's not full time, it's often 1 or 2 days a week. So you've also got an immigration boom, and you've got multi-generational families often now living under one roof. So I think the shape and style of homes and the purpose of homes and has changed a bit as well. So there's no doubt that people are saying, well, this is now a home. It's now my in-laws are going to move in with us. I need to work from home, so I need a studio above the garage. And so it's quite an interesting time for property and design and lifestyle, as we said. So it's funny enough, we all hated COVID for a variety of reasons, and many people sadly lost their lives. But I think as a catalyst for change, there's no doubt that it's created some positive post-COVID changes for people.
Some very cool insights there. We're going to take another break. Don't go away. See you on the other side with more from John McGrath. Welcome back to this conversation. We are joined by John McGrath, Chief Executive Officer at McGrath Estate Agents. And John, before the break, you did mention something about a brand refresh. And I've seen some of this and it all looks really, really cool. Can you actually talk us through, I guess, the instigator and the why for making a change?
Yeah, look, we're excited about it, Grace, and it'll run through the entire organisation. It's not just about a logo and a colour change. It's about everything we do, and it's about our digital and our social and all of our sales collateral. So we're excited, but it's a big job. So it was interesting. There's an old saying that says, just when you're getting sick of your logo, the community or the market's getting used to it. So it's always hard to know. You don't want to do it too early. You don't want to wait too long. You don't want to become like Kodak that kind of waited too long and they got their strategy wrong and they, huge corporation ended up disappearing. But you also don't want to change your look and feel too often. And it's actually surprisingly, I didn't even realize this until we made the change. It's been close to 2 decades or thereabouts.
No way.
Since our last kind of corporate change. It kind of feels like yesterday in a way, as many things do. So we looked at it, and Shane Swallen, who's on our board of directors, he said, I just get a feeling that it could be a good time. And he was probably the catalyst for it. And we had a discussion, and then we interviewed some design firms, and we got some great proposals as to where they saw the brand and how they saw the brand being potentially brought further into the 21st century. And a number of things are really important for us: integrity, transparency, authenticity, quality, all of those factors. And of course, all of them need to show up, we believe, in your brand. And again, not just in a logo, but whether it's the coffee you serve or it's the music you play or the quality of your office locations and the fit outs. And of course, your brochures and your signboards and all of those things. So, we sat down and we identified a company called Tobin in Sydney, Surrey Hills in inner Sydney, and we felt they best fitted our needs. And we'd had some great referrals and recommendations from people that had used them, including Shane, funny enough. He used it for a company that he's involved with now. And so we went and saw them. We really liked their work. They do very fine, sophisticated work. They don't shout at you. They talk, and I'm talking about, in terms of their work, doesn't shout at you. They talk intelligently to customers. And they came on board and we enjoyed the first few conversations. So we hired them, and then they went through not just talking to a number of internal stakeholders, but a number of our customers. And we're really happy with what they've come up with, which is a combination of a tweak to the logo. It's funny, when I presented it to our team, Grace, I said, look, don't expect a massive change. See this very much as evolution, not revolution, because a lot of people, funny enough, we'd actually changed the logo in our new office and we'd put it up and no one had noticed it. So that's how close sometimes these things get. But that was by design, not by fluke. But when you explain it and you see it and you said, we want to be more human, we want to be more authentic, we want to have the transparency and the modernity that we believe we bring to the real estate space, people get it, and then they can sort of they relate to it. And then, of course, you've got the big job of laying the new colours and the new logo and the new fonts across a whole range of sales collateral. So it gave us a good chance to sort of pare back and curate some of the things we had on offer. I'm a great believer of less is more. I think that too many options overwhelm and they dilute the potency of a brand. So we were able to look at our signboard offerings and kind of tighten that up, and our brochure offerings and so forth. So we're very excited about it. Of course, it energizes the company as well as hopefully the communities that we serve. So yeah, that's happening. And then we had already been planning prior to the rebrand a new website launch. So that sort of the rebrand fitted nicely into the new website launch, which will be happening in the next sort of 6 weeks from now. So it's all dovetail in nicely, and yeah, it's busy, but we think busy is a good kind of state to be in, and productive and energetic. We like all those sort of states.
I mean, speaking about energetic, a lot of the investors, a lot of the listeners of this show are all about, keeping on top of the game, which is clearly what you guys are doing by the rebrand, the refresh as well. Before I let you go, John, can I get you to offer some tips or some insights or some advice to anyone out there who might be looking to buy property in this market?
Yeah, sure. Look, as I said in the earlier comments we made, Grace, I think it's a great time to buy, but it kind of arguably always is if you're buying the right property in the right location for the long term, you're always going to do well. So, I say to people, don't try and over finesse the timing, just be in it for the long term. And don't also try and over finesse when you find the right property, the pricing, because no one really knows the value of property. Do your research, important. And nowadays through REA and Domain and a whole range of sites, you can get as much information as you need. So really do your homework on locations, on pricing. Go to as many open homes as you can. Go to as many auctions as you can, so you get a real finger on the pulse of the market. Once you've identified, a simple strategy is, preferably something that you can drive past will make a good investment because it's close. If there's a problem, you can check it out. You know the area. That doesn't mean it's your own suburb, but possibly your own city. So I'm saying if you're a Sydney sider, you don't necessarily have to go to Muswellbrook to buy a property. I would be saying there should be good options in Sydney. If you're in Muswellbrook, there should be good options in the Hunter region. So I think try and stick to areas that you have a solid understanding of and that you can, relate to. Do your homework, use all the technology that's out there. Some buyers now are even using buyer's agents. We think that can make a lot of sense, having an expert help you select and negotiate the right property. So I think there's more tools and services available for investors than ever before. If you go to an auction, go to as many auctions before you find the one that you want to go to get used to the environment, because auction is often a great place to buy property. You get decision from vendors on the day and you're bidding at fair market value by definition. But it can also be stressful and intimidating for people. So I say if you're going to go to auction, take someone that's experienced with you. Could be an agent, could be a solicitor, could be an accountant, could be just a friend that's commercially experienced. Take them with you. Attend as many before the one you want to go for, so it's a less intimidating environment. Know what you can afford and what you can't. And don't go over your limit. There's nothing worse than buying a property and then wondering whether you can afford it, and then every single month worrying about the mortgage payment. You don't have to go beyond your means. Having said that, also don't try and over finesse the price. I've had people come to me and say, oh, they want 1.32 and I've offered 1.31. I won't go another cent. And I say, seriously, if it makes sense at 131, it probably should make sense at 132. If you really love it and it ticks the boxes and it's got natural light and it's in a good location and it's got some growth profile, don't try and overthink the market to, a few percent. Negotiate the best deal, then close it. Put it away for the next 10 years. Find a good managing agent to make sure that it gets looked after. And, you'll get a great outcome. I mean, I'm fortunate now, having been in it for nearly 4 decades. I'm selling properties. I sold a property, one of my first ever homes, Grace, was at 107 Underwood Street in Paddington, which I sold for 107,000. So it was an easy one to remember. And I think we just sold it for 1.6 or 1.7 million fairly recently. And I just sort of think back to the multiples. And at the time, it sounded expensive at 107.
Yeah.
And yet, now, of course. So everything is going to sound a bit expensive when you buy it. That's just human nature. And everything when you sell it, you'll say, oh, my God, I'm glad I bought that 10 years ago.
It's some good points to make. And one last question for you, John. Continuing, I guess, the advice for anyone who is looking to buy, and that's simply how to work with real estate agents.
Yeah.
How do you want people working with you?
Well, look, I think you've got to once you've got a little simple strategy about where you want to buy, you've got to try and identify the agents that are most active in the area, preferably. I mean, you can buy from any agent, but if it looks like someone's got 50% of the sort of market share of the properties you're after, you want to get in touch with that agent, give them a brief. Be as transparent as you can. You don't have to tell them every last cent you've got to spend, but just if you like a property they're representing, tell them. I've had people ring me up and say, couldn't believe it. I went to an open and I really fell in love with this property. I went back the next Saturday and it was gone. I said, well, did you tell them you're interested? Oh, I didn't want to give it away. I said, well, it's kind of like you've defeated yourself by just trying to be a bit too tricky and too clandestine in your searching. So, be open and honest. And I think, you'll quickly identify the agents that are honest, transparent, and realistic in their representation. Sadly, there's not enough of those. I'd like our industry as a whole to be a bit more straightforward in the way they quote prices and what they expect and give buyers rationale behind it. Because I always say to our agents, just tell the vendor and the buyer the same thing. It's very, very easy. If you think it's worth 1.2 to 1.3, tell the vendor and then tell the buyers and give them rationale, give them comparable sales. So a good agent will do that. They'll be straight with you. They'll give you the data you need to be comfortable with the range they've quoted. Then still go and do your own research just to double check it. And you'll very quickly sort through. I've had people sadly tell me I wouldn't buy that property because of that agent. And I just think, wow, what a travesty that someone's hired that agent to get them a better price. And yet there are people in the buying community that are avoiding that property because the agent hasn't been straightforward in other situations. So again, because I know a lot of agents listen to your program, of course, and I just keep encouraging the industry, and I will till I die. Just tell the truth, be honest about it, use facts to back up your rationale and your thinking, deliver great service, and you're going to have a great, long and fruitful career.
John, as always, so wonderful to chat with you. Thank you so much for sharing some of your wisdom with our listeners. We really, really appreciate it. And I think all of our listeners will have loved it as well. So thank you for the time. I know how busy you must be.
No, thanks, Grace. It's always great to chat to you. And we appreciate you being interested and look forward to staying in touch with some of the new things we might do down the track.
Looking forward to it. To everyone who is listening along, we hope you have enjoyed this episode. Like or review us on whatever platform that you do listen to your podcasts on. And if you have any questions, editor@smartpropertyinvestment.com.au. As always, stay up to date with all the latest news on our website and check us out on social media, Facebook, Twitter, LinkedIn, and Instagram. Until next time, stay safe and well wherever you're listening from. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.